So tell us what you think of what you've just heard, and then begin the conversation, and I will turn afterwards to Arunma, begin the conversation about what all of this means for Nigeria. What are the direct impacts of these things on the Nigerian economy?
Okay. Thank you very much, Chris. Well, it's quite ironic, I think, when you look at the Eurozone sovereign debt crisis, that most of these countries that in the past used to force a lot of the so-called third world countries into structural adjustments are also finding it very difficult themselves now to swallow the bitter pill. Luckily for us on this side of the world, we have restructured our economies. And if you take a look at the Nigeria at the macro level, Nigeria is the third fastest growing economy in the world. We've averaged 7% over the last 3 years. As one of the areas that I'm tracking, which is foreign direct investments, we've seen a 48% rise in FDIs in Nigeria to close to about 9 billion. Those are untapped numbers, but looking at the tracking that we're doing locally, we're seeing FDIs close to about 16, 17 billion in US. And this year we're looking to look at probably close to $20 billion in FDIs from what we're tracking. Nigeria has now become Africa's preferred investment destination, as most of the FDIs coming into Africa, a significant portion of that is coming into Nigeria. The attractiveness of our portfolio markets, I think, are quite clear in the sense that 80% of the activity in both the debt and equity markets here, especially the bond markets, are from foreign investment portfolio managers. We've recently gone up 11 points on the Competitiveness index, which is good, but when you compare the fact that Liberia has come in ahead of Nigeria after a 10-year civil war, we still have a lot of work to do in that area. So quite clearly, on paper, Nigeria is very strong, but this is also despite the infrastructure deficit that we need to address. So with the interest in Nigeria, I think it's quite important that the government, which we're trying to do, is to be able to position the economy to be able to take advantage of this interest, to be able to focus on financing our infrastructure deficit, which is really where we have a problem now in Nigeria. The other problem we have is the issue of growth in employment. We have severe unemployment issues, and despite the growth you see, and that's because manufacturing still accounts for 4% of GDP, but if you compare those economies that are growing at 7%, manufacturing in those economies are close to 35 to 45% of GDP. So these are the structural deficits in terms of the infrastructure deficit we need to address.
Let's hold on to the employment point for a moment or two later, because you brought up quite a lot there. Arunma, let me bring you in. I mean, clearly Nigeria is moving towards being an integrated global economy, connections everywhere. Now, the sort of most emerging of emerging markets are quite able to sit pretty, have been quite able to sit pretty during the global financial crisis because they have no interconnections at all. That's certainly not the case for Nigeria. Talk us through a little bit from your perspective what you think those connections are, and what some of the things we've been talking about, what impact they have on Nigeria or may have.
Well, first of all, Chris, before I respond to the issues, I have to say that the opinions I'm airing are mine, because I work for the government and I'm a regulator. But I'm delighted to be here because Chris and I have known each other since 1993, and I'm glad you're already having a successful conference. For me, I think that the starting point is to say what is different this time globally. And I think it's not just the fragility of the growth, but it's just a confidence gap. I think all across the world there is just a lack of confidence, and people have seen, particularly in the more developed markets, their well-being basically decline. A lot of people have seen job losses in ways that they haven't seen. And as was pointed out earlier, what you've seen as the usual poles of growth and the drivers of growth globally are no longer the drivers of growth. So I think that it's, for any country, this is a time of reflection and seeing how to do whatever you do right. But I do think for our own country, Nigeria, it's clearly a time of opportunity. And we need to keep running so that we can take full advantage of the opportunity. Why do I say it's a time of opportunity? First of all, we're seeing, as Tilewa mentioned, portfolio flows that we haven't seen previously. I mean, we've seen over the last 6 to 8 months foreign investment flows driving our debt markets.
Can I just interrupt you there for one second and ask you where, if foreign investors are allocating, portfolio investors are allocating more capital to Nigeria, where, I know it's not a zero-sum game, but where are they not investing in order to invest in Nigeria, in your view?
They're not investing in infrastructure yet. And part of it is because the dynamics for preparing infrastructure, which is a big constraint, as Tilewa mentioned, we haven't really completed the process of restructuring infrastructure. So that's one. But I do think that there is still scope for us to take advantage of the interest that we're seeing from the world in Nigeria. I do see also other opportunities. We've seen a bank like Access Bank do a very successful Eurobond transaction. So there are opportunities for entities in Nigeria to consider borrowing abroad, and I know there are a number in the pipeline because even on an exchange rate adjusted basis, for some of them it's still cheaper to borrow abroad, which means that it's better to invest in Nigeria. So we're benefiting from flows from portfolio managers who are looking at Nigeria as the preferred investment destination, but it's still an opportunity for some of our corporates to consider issuing internationally, and we've seen some very, very successful transactions. Where I see a big concern for us is really the impact of the fragility of the global economic environment on oil prices, because we're still very dependent on oil, despite some of the great work we've done to diversify our economy. And so that's where I see the vulnerability. But we're working on it. We've been on the side of the executive. I think there's been a determination to maintain the benchmark price at a rate that's reasonable. So even though oil prices are way above $100, we're still submitting a budget for 2013 where the benchmark price that is being proposed by the executive is inside $75.
But okay, but what production volume is being predicted? Because in the past it's been commented upon that although Nigeria is using a budget number which is significantly below market, it is using an exaggerated barrel per day number, which kind of cancels out that degree of probity. Is that something you've looked at? Is that something anybody on the panel can comment on?
The budgeting process, Chris, the budgeting process is very specific to the fact that we clearly want to always go below the oil price, so that what we have, and that's why you have what you call the excess crude account. So any excess in terms of the volatility of the oil price is reflected by the levels of the excess crude account. And that's why the sovereign wealth fund is now coming online. So those are the areas of managing the sort of deficit of the surpluses.
It is a more physical consolidation initiative, which is that we don't want the volatility in oil prices to translate into a volatility in physical revenues and how we manage physical revenues. So we want to be able to save anything beyond the benchmark price. And I think it's wonderful for our country that we have established a sovereign wealth fund, because one of the tranches of that fund is going to focus on investing in infrastructure. And we've seen a number of sovereign wealth funds around the world that are looking at co-investing with us. And so we're looking to address some of our big issues. So I think it's something that is probably what I would consider one of the great success stories for Nigeria.